Ladies and gentlemen, good day and welcome to the Cantabil Retail India Limited's Q1 FY2024 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Before we begin, a brief disclaimer. The presentation, which contains Cantabil Retail India Limited, has uploaded on the stock exchange and their website. Include the discussions during the call contains or may contain certain forward-looking statements concerning Cantabil Retail India Limited's business prospects and profitability, which are subject to several risks and uncertainties, and the actual result could materially differ from those in such forward-looking statements. I would now like to hand the conference over to Mr. Vijay Bansal, CMD, Cantabil Retail. Thank you, and over to you, sir.
Good morning and welcome to everyone present on the call. Along with me, I have Mr. Deepak Bansal, our whole-time director, Mr. Basant Goel, whole-time director, Mr. Swendra Nigam, Chief Financial Officer, and Mrs. Poonam Chahal, our company secretary, and Madsen Capital Advisory Private Limited, our investor relations advisor. I hope you all have got the chance to review our investor presentation now. Who have not yet can view them on the stock exchange and the company website. In Q1 FY24, we have seen challenges. Retail sector in India and the operating environment was not on growth side in this industry. We delivered a revenue of 112 crore, registering a growth of 11% year-on-year, mainly on account of our consistent expansion plan of our retail footprints. We registered a PAT of 12.27 crore as compared to 14.12 crore in Q1 FY23. In Q1 FY24, the company has had 14 stores in line with our expansion strategy of exploring new market of Tier 2, Tier 3 towns and beyond. Our total EBO stands at 461 stores as on June 30. We are also getting good results from our e-commerce venture with various marketplace partners. Our omni-channel engagement further enhance our customer experience and seamless shopping experience to them. With this, I would like to hand over the call to our CFO, Mr. Swendra Nigam.
Thank you, sir, and a very warm welcome to everyone. Coming to the financials and operational performance highlights for Q1 FY24. Our revenue from operations for Q1 FY24 grew by 11% and stands at 112 crore as compared to 101 crore in Q1 FY23. Now comes to EBITDA. EBITDA for Q1 FY24 stood at 34 crore and EBITDA margin for Q1 FY24 stood at 30.8, that is 31%. PBT stands for 13.6%, which is 15 crore, and as far as PAT, we have registered a PAT of 12 crore with a margin percentage of PAT is 11%. We will now open the floor for Q&A session. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Before we take the first question, I'd like to remind all participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The first question is from the line of Ankit Beher from Shubhkam Ventures. Please go ahead.
Yeah, good afternoon, sir. I'm Ankit here from Manchester.
Yes, Ankit.
Yeah. So, a couple of questions. What I was observing was that on a YOY basis, your gross margins have been maintained more or less, but your EBITDA margins have declined a lot. So, what is the reason for the same?
So, Ankit, we have seen, not a very steady growth on the same store. So we have been able to maintain our gross margin, which we have been committed from earlier. 65% of the overall margin is maintained. But new expansion store is being there, and we have seen actually, same store growth on a negative side of 5% in terms of volume, which is due to various reasons. You have seen the industry was quite, on a bad for this one. But overall things for the company is good. So that is why we have been able to maintain the gross margin since the same store growth was not there in Q1. So that is a little bit of an expansion. So overall EBITDA as compared to last year 14 crore is 12 crore for this time.
Basically, there was a negative operating leverage, what you said this quarter.
So for the first quarter, growth in the same store was not there. So that is why it is being there.
So, sir, is there a seasonality in your business based on the previous quarters? I mean, any festive? So these are the quarters that the performance is good and which are the lean quarters?
Absolutely. So actually, this is the most lean quarter. That is the Q1. So my sale was always been going quarter on quarter up Q1, and then Q2 is slightly up, then Q3 and Q4 because that's the winter and the ticket sizes improved a lot. So that's what the margin, but the gross margin is being higher for this because mostly the fresh season material is being there. The moment we will grow, our revenue will grow, and the second half of the season, that is third quarter, Q3 and Q4 will have the best number. That is a very large number as compared to Q1 and Q2.
So what are the sustainable gross margins and henceforth EBITDA margins of clear you expect?
So since initially for last many years our commentary you must have been listening, that we have been committed to maintain the 55% of the gross margin. Last year just seen because e-commerce share has been increasing. So we have been able to maintain approximately 55% on an annualized basis. Quarter on quarter there would be a variation, but 54 to 55% of the gross margin is going to be maintained on an annualized basis. And when we have been able to maintain 55% of the gross margin, our EBITDA level margin would be 19 to 20%, what we have been commented earlier, and 12 to 13% of the 12% you can say the PAT margin would be maintained.
19 to 20 you mean to say pre-Ind margin. So on a reported basis, what will be the margin?
30% we are taking 29 to 30%.
The 55% gross margins, 29 to 30% reported margins, 20 to 20% pre-Ind margins, and net margin would be around 12 to 13%.
Correct. Yeah.
Okay.
12%.
Okay. And sir, what kind of top line growth you are expecting for this year based on your retail expansion and the SPG you expect the next 3 quarters?
So we have, since even as the first quarter was what I explained just now, we have not yet revised any of the targets, and 20% of the growth we have been expecting.
So full year 20% revenue growth, and will it be mostly led by store expansion or there you still expect some SSG?
We are looking at Q1 was quite challenging. Q2 we are expecting some growth from the same store as well, and obviously Q3, Q4 will be there. So initial what we have been committed, we are working on to 5% of the same store growth we are expecting. The expansion and e-commerce has shown a very good results for us. What we have been worked for last 2 years in a very harder manner. So e-commerce contribution would be there. So overall target, the 20% what the company has the initial target, it has been maintained, and we are not revisited or revised any target.
And is e-commerce a low margin business or a high margin business or a similar margin business compared to the company?
So that is why I committed last year 56+% of the gross margin. But the moment I grow my e-commerce business, the 1 or 2% of the gross margin level would be hit. So that is why we have been committing 54 to 55% of the gross margin.
Okay. Sir, one more question was that obviously we have seen a recent correction in cotton prices completely. So, will it help you to improve your gross margins or will pass it on to the customer? Or will you take any price hikes or price cuts in the coming quarters in the commodity price movement?
So when the prices being settled or whatever being that, we are not increasing any prices because the industry and we are working on a particular method of arriving at a MRP. So there's a cost for the company is less. So obviously the benefit would pass on the customer because my MRP would be less and the earlier stock which is on the higher price would be less. So we are not any increase in the prices. Actually there is no increase in the price. If cotton prices are coming down, raw material prices are being coming down, obviously the benefit will go to the customer.
Okay, but any price action you took in the first quarter or again the same was followed?
There is no reduction we have been taken. There is no hike we have been maintained. Our parameters of arriving prices has been same.
Okay, so my last question is the store level economics. So typically whenever you open a store, what is the CapEx per store per square feet or CapEx, and what is the inventory and any other charges? What is the investment when you open a store, and at what level of revenues you guys break even at store level?
Correct. So there are two questions we have been asked. Number one, what is the investment size in one store, and what is our break-even period and payback period? Right.
Sure.
So as far as investment is concerned, average size for our store is approximately 1,200 square feet. And there is a cost per square feet coming in the range of CapEx, 2,000 to 2,100 rupees per square feet, and approximately same with the inventory costs, right? So if I am opening it 1,200, you can say a ballpark figure of 1,000 or 1,100 square feet of the store. I invest across 22, 25 lakhs in between in the CapEx side, and at the same time, same amount of it is required in the inventory side. So one store of 1,000 to 1,100 and 1,200 square feet, including landlord deposit, some portion is there. Approximately, roughly ballpark figure is 50 lakhs we are investing. So as far as revenue is concerned, we are targeting the store which is giving us at least 1 crore of the annualized revenue on a maturity level, right? So last year, if you have seen our last year annual number was 1.35 crore for the one store revenue. So that is a way ahead of this. By considering these factors, 1 crore of the minimum revenue side, 6 months is on and over. Since from the very first month, so the Cantabil is a brand where you can get the break even from the first month itself. Overall, considering on annualized basis, 6 months approximately is the break even period. And by this CapEx investment in inventory management, 2 to 2.5 years is our payback period.
Okay, and this 50 lakhs is the gross investments. You must be getting some credit on your inventory also.
That's the other thing. I am talking about what the investment on the front end side because we are in production as well, right? When we are in production, so there is some inventory is being required for the back end as well. That is in supply chain and manufacturing raw material WIP. So almost that amount what we have towards 25 to 30%, that has been on a creditor side.
Okay, so any return ratios you target by opening a store or for the company as a whole?
Sorry, didn't get your question clearly. What is that?
I mean, any return ratios in your mind as a company we are targeting 15%, 10% ROE, ROC?
Nothing like that. Overall, we are targeting overall business on a company level, which has been very healthy ROE and ROI and ROC. The 30% you have seen and the 40% plus for the ROC side. So that is the only rate, not individually, because the potential on the 1 crore plus store is being there, which has given 1.35 crore of the last year. So all this. So overall company level we have been deciding.
So you will sustain 25-30%.
Whatever the number we are telling, that is on a sustainable basis only.
Okay. Thank you so much, sir. Thanks for the answer.
Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Yash Bajaj from Lucky Investment. Please go ahead.
Hi, thanks for the opportunity, sir.
Thanks,
sir. I had 4 questions. First is, did we see any impact of the postponement of wedding dates in this quarter and the share of wedding wear in this quarter and Q1 FY23? That is my first question.
Yeah, there has been downside in the wedding business this summer season because majorly we have seen that the wedding for the summer season has gone postponed for the winters because most of the people now prefer that summer weddings are uncomfortable. So in winter time the weddings are more comfortable. People are able to enjoy better in the open spaces. So yes, we see that in the third quarter and the fourth quarter, the wedding business will be very good, and we have seen a slump in the wedding business in the Q1.
Okay. So, wedding wouldn't be that material this quarter, right?
Because this is the monsoon season, and anyhow in monsoon season there is no wedding season in India. So yeah, in quarter 2 there is no wedding buying.
Okay. And my second question is, what was the contribution of e-com this quarter?
E-com contribution is around 6% this quarter.
Percent. This was FY2023 3 to 4%, right?
No, FY23 for us on annual basis was 1.5%. It was 2.5%. For 15 crore we did out of 550 crore. 3% approximately was the annual contribution.
Okay. My third question is, what was the pre-Ind AS margin this quarter?
Pre-Ind AS margin for this quarter was 16.5%. Pre-Ind AS. It will be 31% for post-Ind AS. It is approximately 17%.
Pre-Ind AS margin is 17%, right?
17 EBITDA margin I'm talking about.
Okay. So my last question is, sir, how much inventory do we have of the books this quarter?
So inventory in terms of days, or actually inventory in terms of days on an annualized basis this quarter also, because this is the quarter where we need the started production for the winter as well. So this quarter as well as on a 30th September what we'll get. So this itself is approx 140 to 145 days of the inventory being there, which was the last annual figure as well.
Okay, so there's no change in inventory days for this quarter?
Not now. We have to see on an annualized basis. Last year it was 144 days, and we have mentioned that we are committed to bring it back to approx 135 days. Because our inventory is to be understood in two parts. What the majority confusion is being there, because we are in manufacturing as well. That is very important, this one. So when I'm talking about manufacturing, there are approximately 20% of my inventory is being there in raw material and WIP. So when we are finding out our inventory days, we should not club it. That is like an investment we are making. There's 35 to 40 crore investment is being there. If I remove this, then my inventory is approx 20 days, which we are being controlling.
Got it. That's all from my side. Thank you, sir.
Thank you. Reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Levin Shah, an individual investor. Please go ahead.
Thanks for the opportunity. Just wanted to understand from you the guidance on the marketing expenses on a yearly basis. What do you typically budget for?
So overall marketing budget we are keeping is 2% of the revenue. It is lying in between 1.5 to 2%. So the target for this financial year is the same one.
Just a follow-up and kind of related question would be, what is the expansion plan in terms of store additions for the next couple of years?
Yeah, we are planning to expand 80 stores per year, and so it's like 6.5 stores per month we are opening.
Actually, just trying to relate both the questions together in terms of this aggressive store addition plan which is being planned. Do you think that this 1.5 to 2% is expected to go up further?
No.
Because obviously you will be adding stores, adding new stores, so just to popularize those stores as well.
So we have been doing advertisement expenses majorly on the upcoming stores in the past also. So our experience is that it goes to 2% if we consider expenses on the new store also. So it will be in the same line that it will be coming around 2%. In absolute number, to definitely the expense will increase, because as the sale will go up, then 2% of bigger value will be, absolute value will be bigger. So we don't think it will go up further.
Understood. And so this is the last question. I guess someone asked the question earlier, but I wanted to understand in terms of the per store square feet sales for the year, where do you see it settling it at the end of the year? Obviously, Q1 was, as you rightly mentioned, that was kind of muted. What do you expect that to be settled down at the end of the year on a yearly basis?
So I think what is per square feet sale you are correlating with overall sale for the annualized basis.
Right.
Yes, obviously, when the same store growth is not being there for the Q1, and that is normal for the industry. So yes, that is on a slightly flat, lower side. Last year for the Q1, my per square feet sale approximately 800, which came down to 700. So we have been at that. And on annualized basis, what is our target? What we have been achieved in the past, we are very hopeful to achieve in the same thing. Plus minus 1 or 2% is a different thing. Overall, we are absolutely okay on an annualized basis.
Understood. Thank you, sir. That's it from my end. Thank you.
Thank you. The next question is from the line of Navsat Parekh from Native Capital. Please go ahead.
Hi, thanks for taking the question. My first question was on marketing. Do you do influencer marketing, and is there a spend associated with that too?
Come again, I haven't followed right your question.
Sorry?
Can you please come again? I haven't got your question.
Yeah. So my question was, do you do influencer marketing? And, is that what spend would that be?
Yeah, we are doing influencer marketing. So the spend is not very big because we have recently started, like in the COVID time, we only started with the online sales. So influencer marketing is majorly done by the players who are majorly into the online space. We are majorly into the offline space. So our spend on the influencer marketing is little lesser. So it is not a very significant figure to be mentioned for the influencer marketing, maybe coming around 2 to 5 lakhs per month. That's it.
Okay. And second question was on competition. Increasingly players are opening stores in tier 2, tier 3. Zudio is also something that trend started in bunch of other competition. So what is your view on competition? Are you seeing increased competition, and how should we think about that?
Zudio is really growing fast, so there is competition from the Zudio, but we see it majorly happening during initial phase when the Zudio store opens in the town. So yes, there is some impact in the initial months, but later on our sales stabilizes or grow back to the initial level. So I doesn't think Zudio is impacting us that in the long run. In the short run, yeah, for a few months after the opening, it's impacting.
Okay, but do you see that as, on a long-term basis, do you see impact? Do you have to do more things around pricing, discount? Does it impact your margins where Zudio is opening up or something like that?
Zudio quality is a little less what we are offering to the customer. So once customer switches, he realizes that yes, Cantabil has better quality to offer than what Zudio is offering, because they can't offer the same because their prices are like half than what we are selling at. So definitely quality can't be the same. So customer comes back to us later.
Okay. And I want to understand, do you track any data on repeat purchases, repeat customers, and things like that? Can you share some, insights on that? What percentage would be repeat customers for you in a year, and how many times, does a customer come again or something like that?
Yeah, we have checked the data. We have around 50% customers who are repeating and 50% customers are the new customers.
Sorry, 50% customers are repeat?
50% are the old customers, which are the repeat customers. Yeah.
Okay, got it. Thank you so much.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. Next question is from the line of Gasia from Nuvama Wealth. Please go ahead.
Hello. Thank you for taking my question. If I specified your same-store sales growth was negative 5.7%, right, for this quarter? So what was the same-store sales growth previous Q1 FY23? For Q1 FY23, what would have been the same-store sales growth for us?
Last year, right? Last year you are talking about. I think it was in the range of approx 6 to 7%. Q1. I'm talking about Q1.
Q1, yes.
Q1 last year.
And like you had given a target of 5 to 7% change per year. Considering this negative round about 6%, are you still maintaining that range, 5 to 10% division in that?
So to be honest, I mentioned earlier, we have not yet revised any of our budget or any of our target. So covering those numbers, because July was also started well, but due to an exceptional, high rain, so it has been again on a flatter side, slightly. But August is going good. So honestly speaking, we have not yet revised any of our annual budget. Other things, we are very hopeful because the festival season is, whole of the industry is looking at that, and we are very sure the customer would get that. It may not be 5-7%, it may be 3-4%, 4-5% on an annualized basis. But definitely some part would be there, and overall target is still same.
Okay, that helps. And your realization growth, how would that be going forward for this quarter and also for FY25? Usually it is what range?
So absolutely on a same link, everything is same. When we have been expecting our same store growth is there, so per square feet sale or average, everything would be maintained in that line. So we are not expecting on an annualized basis the growth much in overall terms.
So your ASP of 1100 around, would that be maintained at the similar levels, or we should be expecting some hike in line with inflation?
Whenever we are discussing any number and mentioning any number, plus minus 2%, 3%, oh, that's a different thing. But overall targets of crossing 1100, we are very hopeful.
Okay. And sir, last question from my side, the gender-wise sales pickup, but now where should we see this going forward in the next 2 to 3 years? Like the men percentage contribution that should be going down, the women should be, or it should be going up. How would that be seeing in the next 2 years?
So in our earlier commentary as well, we have told we are being exclusively opening stores of ladies and kids, right? So last year, you see, we are doing approximately 86% of the men's category, 9 to 10% of the women's, then 2% of the kids, and 3% of factories. So overall, it will increase slightly, but on an absolute level, like in Q1, we have seen a good growth in terms of ladies. There was a 10% contribution in terms of women. Kids has also grown from 2 to 3%. And accessories also grown from 3 to 4% because men's obviously same store tier 2, 3, 4 not too long. That has come down from 86 overall to 83%. So on an overall basis, the numbers would be approximately 83 to 84% what we are expecting from men's, 10-11% from ladies, and then the 3% from kids, and 3 to 4% from the accessories.
So considering more store openings for the women and followed by kids, would the inventory be going up for us in the near term?
We are actually increasing the ladies and stores very gradually. We are like opening only one ladies and kids store per month. So inventory won't be going much up because the expansion for the ladies and kids is very gradual.
Probably we will maintain around 140 days or so.
Yes, absolutely. Those numbers. Overall target for this one. This is all 140 days, 140. This is all considering those, so it will be in the same range on an annualized basis.
Okay, sure. That helps. Thanks.
Thanks, Kapil.
Thank you. The next question is from the line of Sri Ranjana Mittal from Ratnataya Capital. Please go ahead.
Hello. Thank you for the opportunity, sir. So just a clarification. So you mentioned about 20% of your inventory is work in progress, right?
Correct.
And also we have around 200 crores out of inventory. So just 80% of it, that is basically investment in per store, and also there is some inventory which we have in the 4 stores because we don't outright sales. Is that correct?
Right, absolutely.
That will come to about per store. It will be per store the inventory investment would be around it comes to around 40-50 lakhs. So is that the correct number?
No, that's not. Let me explain again.
Yeah.
So for us, depending on the size, you are right, because per square feet, we are keeping approx 5 to 6 pieces per square feet and approximately 2 to 3 pieces per per square feet is being there on my back-end supply engine. So if I'll be investing apart from my work in progress and raw material, you can take it across 8 pieces is being invested, 8 to 9 pieces is being there, right? So considering 425 rupees across, so overall considering the back-end inventory on the, because we are opening bigger stores now. Earlier our size was this quarter, we have our average size opening is approximately 1400. Right, obviously on the size basis, 1400 square feet store is being there, considering back-end and front-end inventory, 35 to 40 lakh inventory is being there.
Understood. Understood. Thank you, sir. Thank you. That's okay.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Rajesh Jain from Anand Research. Please go ahead.
Hello. Yeah, congratulations for a good set of numbers.
Thank you.
Thank you for taking my questions. My question is like, what are the store additions planned this year as well as next year?
We are planning to add 80 stores this year and 80 new stores in the next year. So it will be combination of both all three kind of stores, exclusive men's and ladies, family, and ladies and kids store. So this is the number which we are maintaining from the last few. This is the only number we will be going with in the coming years.
Can you give a breakup like from these, how much will be from Coco and how much from Coco?
Yes, sir, our ratio is 70-30, 70% are the company stores and 30% are the franchise stores, and we will be going to the same model in the future.
One more question. Can you give us any guidance related to revenue and margin for FY2024 and if possible for next 2 years?
So as I mentioned earlier as well, so we are expecting a growth of approximately, you can say in the range of 18-20% for this financial year and going forward also. So that's the revenue growth we have been expecting. So the moment I'll be in our earlier commentary, as they say, the moment we are growing by this percent, 20-22% of the CAGR. So by the FY26, we have a clear to take a target of approx 1,000 crore of the revenue company. Simple.
Okay, thank you. And so one more question, like what is the demand outlook for the current season you foresee?
Demand outlook in the current quarter is not very good. Due to July was a little bad due to the flood. August is good. But in the quarter 3 and quarter 4, demand outlook is very positive because there will be a Diwali season, and post Diwali there will be the winter season, which is at the highest sale season of the year. So demand in the second half of the season, outlook for the second half of the year is very good.
Okay, sir. That's all from my side. Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Rathod from One Up Advisors. Please go ahead.
Good afternoon, sir. Couple of questions from my side. First is, you're targeting for around 70 to 80 stores per annum. When I look at the manufacturing side, first question is how much is the capacity, in-house capacity? And secondly, what are the plans in terms of considering we are on to an aggressive store expansion plan? Are we looking at any investment in terms of adding more capacity in-house?
So, what is our manufacturing capacities are? So when I'm talking about this financial year or last financial year, we have a state-of-the-art factory in our Bahadurgarh, Haryana, which is being able to produce approx 15 lakh garments per annum. Right? So that is for the last year, that was able to supply 1/3 of our requirement of complete sale. And at the same time, 1/3 we are getting from our dedicated fabrication units, right? Whom we are supplying the raw material, and they are just fabricating and giving us. So 2/3 we are being completely controlling, and the balance 1/3 will be coming from a FOB basis, are mainly for the knitting material. Ludhiana is hub for them, and we are also procuring from ears from Ludhiana itself. So this one-third proportion is being there. One-third from the own factory and one-third is from the fabricator. That means two-third is from the manufacturing side from our side and one-third is from this side. Going forward, we are working on this and the same proportion would be maintained. Two-third would be maintained from the factory as well as fabricator, and the balance would be coming from the you will one-third of 40% on a FOB basis.
So, understood. So the point which comes out is, considering that, you're currently at 260 odd stores and you would be around 700 stores in a period of 3 years from here.
Mm-hmm.
So what is the CapEx that would go in terms of capacity expansion? Will we have to acquire more land for putting up the factory, or the current land is sufficient to take care of that expansion?
So we are core retailer. We are not manufacturer, but a state-of-the-art factory, and we are very good in manufacturing. So we do not have immediate plan to increase our own production in terms of factory, but definitely the fabricating unit, that is also is like our unit. We are only controlling the supply then. So that is so there. This year we are enhancing our capacity for our Bahadurgarh factory, which may go from 15 lakh pieces to 18 to 20 lakh pieces, and that would be there. So this year already being capex investment is being there. Every capex investment we are doing in terms of content. That is our we are creating a office supply chain. That has required a heavy investment. So that will finish this financial year as well as next financial year, including the capacity enhancement. For the 2 years, that is this financial year, next financial year, we have a plan of in terms of back-end investment, back-end capacity enhancement. But going forward, when I'm talking about 700 stores, there is no further capex heavy plan apart from this what is going this financial year and next financial year. And that is coming from the fabrication side as well as from the FOB side.
Related question on this, what's the advantage or what is the margin advantage in terms of in-house manufacturing or the fabricators whom you control vis-a-vis outsourcing it entirely? And this question is coming from a point wherein you mentioned, considering that we have our own manufacturing also, the inventory is a little higher in terms of raw material and all. Just wanted to understand some things around this.
So I think there are two questions you put. Number one, in terms of margin, is there any difference in the margin? Number two, as far as since we are in manufacturing as well as fabrication, so there is an investment in terms of raw material. That's correct, as I mentioned earlier. So as far as gross margin is being considered, the overall we are being there and the 55% or 54% we are being considered. There is not much difference. Mostly the same prices we are giving to those fabricators what we are being there. So slight difference is being there, but not the much bigger difference is being there.
Okay.
And as far as, sorry, I skipped your next question. So that is on the margin side. So overall margin is being maintained. Slight difference is being there on the margin, but overall margin is being there.
So what's the advantage?
In the in-house manufacturing is definitely slightly better one we are giving to the fabricator, because the profit margin of the fabricator we are able to save when we are doing in-house manufacturing.
But we are able to control the quality and everything.
Yeah, we have a quality checkers team, so there is a proper team to check the quality, so there is no issue of the quality control.
Okay. My other question is, are we our sales more inclined towards winter?
Sorry, inclined towards?
Winter wear.
Winter wear.
Yeah, our sale is more inclined towards the winter wear. Like our sale ratio is like 40% in the first half and 60% comes from the second half.
And is that the same reason why our store expansion or current stores, we are less present in south and more in north?
Yeah, it has a reason of it is due to the climatic factor also, because in south there is no winter season as such. So we have plans to go in the south last, when there will be saturation in the north, east, and west, will be going to the south due to climatic factors.
Okay. So, where do we see how many stores we can, on a back of envelope, working, how many stores do you plan to add up in next 3 years? Aggregate in terms of south expansion.
In south, for the next 2 years, I don't think there will be much need because there is much space in the rest of the India. Yes, after 2 years, we will go there in the south market also.
One more question from my side, considering that end of season, sale season is on, and you guided that the quarter so far has been muted. Are we feeling increased pressure in terms of our margin for this quarter?
Increased pressure in this quarter, what you are saying? Quarterly margin?
Yeah. Yes.
No,
So
we are clear.
typically, this is more of a end of season sale quarter, wherein all the guys come up with sales. So, and our model essentially is also counted sales model. So, do we have to increase the discount further, or how is it?
No, we are offering the same discount which we have offered last year, so there is no extra discounting we are doing to the customers. So the margins will be maintained in this quarter.
Okay. Yeah, that's it from my side. Thank you. All the best for the rest of the day.
A reminder to the participants, if you wish to ask a question, please press star then 1 on your telephone. Next question is from the line of Yash Bajaj from Lucky Investment. Please go ahead.
Yeah.
Hi, thanks for the opportunity again, sir. I just dissected the stores according to the regions, north, west, east, south, center, which you generally give in your presentation and annual report. So I have basically done a calculation of a revenue per store for the last 5 years. So according to my calculations, your west region is performing really well, but your north region is slightly underperforming. Is that observation right?
No, yes, what we have observed in the Q1 is that the worst performing state was the Gujarat state in the Q1. So
I'm not talking about Q1. I'm just talking about let's say like last 5 years. Overall, all last 5 years.
No, I tell you, in the west region we have very less presence in the last 5 years. So in the west, the more openings happened in the west because the space was vacant. So that's why it looks like the west region is growing really fast. But the north region is also growing. It is our like age-old home. North is our age-old home. So definitely growth will be little lesser than from the western territory when it comes to the space. But when it comes to the absolute number, definitely north region contributes bigger chunk than the western region.
Right. I was actually looking more specifically at the revenue per store number of north region.
North revenues per store region will be little bigger than the western region due to the climatic factors.
Okay. I'll take this offline probably. And my second question is, how much would be our e-com in Q1 23? And we have seen a big jump in e-com share. So what are we doing there?
Yeah, basically e-commerce has jumped to more than 300% for the last Q1 and last year. So we have closed the revenue at 6.4 crores in this Q1. And our target would be again the same of around 6 to 7% of the total sales in the whole year. So basically we have added more inventory in the e-commerce business. Now the inventory is we have full inventory and we have added the omnichannel is doing really well. We have added 200 stores of Myntra and we have also added the omnichannel. We are also in process of adding the omnichannels for Ajio as well. So that would be a growth driver for us and I hope that we'll be able to achieve that number. We'll be trying to close around 45 to 50 crores this year.
Okay. So, and we sell on Myntra and Amazon.
Sorry? All the leading marketplaces. No, we are present on all the leading marketplaces from Myntra, Jio, Tata Click, Nykaa. But the best performer is Myntra, which contributes around 50% of the overall sales.
Okay. And you said something related to 200 stores being on omni-channel, which are linked to Myntra.
Right.
Okay. So basically, someone buys something on Myntra, so that's delivered from the store. That's what it is.
Yeah. So basically, all those 200 stores becomes our warehouse. So we have our stores in Gujarat, Maharashtra, and in the east as well. So if the customer is ordering from Maharashtra, it becomes easier for him to get the delivery. He gets the material delivered within a couple of days. So that increases the delivery timeline for us and reduces the logistics costs as well. So the overall inventory exposure that we have on the Myntra is big, because all those 200 stores have become a separate warehouse for us.
Okay. And you said that the e-com segment is performing well because we have increased our inventory over there, right? That's how it is.
Yeah. So basically what we have done is that last year we were only selling the inventory that we had, but now we are working on bestsellers as well. There are certain articles that are doing really well on Myntra, some core articles. So we have made those articles separately for the online business as well, and they are doing really well. Those articles are performing well on all the platforms.
Okay, sir. That's all from my side. Thank you and all the best.
Okay.
Thank you. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Mr. Vijay Bansal for closing comments. Thank you, and over to you, sir.
I would like to once again thank you all for joining us on this call today. We hope we have been able to answer your queries. Please feel free to reach out to our CFO or IR team for any clarifications or feedback. Thank you all.
Thank you. On behalf of Cantabil Retail India Limited, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.